In this video, we're going to talk about the reasons why people don't invest in the stock market. Well, the reason why we work is really so that we can make some money, and then the money that we make, hopefully we can put it into investments. And if we do it right over some time, we might be able to then use the money from our investments to sustain ourselves, especially maybe in retirement or maybe just to buy nice things. You know, if you want to buy a nice bag, a nice shoe, a car, or something like that, right? But hopefully those investments can grow to that stage where they can sustain us. Now, but why is it that people don't invest? There are three main things. And before I get into those three main things, let's talk about this. Please, if you're new here, welcome. And if you're a returning subscriber, thanks for tuning in again. And please don't forget to drop a like on the video. Don't forget to subscribe to the channel. And on this channel, I talk about, investing and saving money. And if you're interested in that, feel free to stick around. Now, one of the first things I want you to understand is the number one reason that prevents a lot of people is lack of knowledge. If we could go back in time to when we didn't know the simple things like ABCs or 1, 2, 3, right? They were all kind of like Greek to us. They were kind of just, I can't remember, but I'm guessing as a baby, they just didn't really mean anything. They were just like figures or things that we saw. But over time, it all made sense to us. But that was because we spent time in school learning to understand numbers, letters, make words. Simple things like that can also be applied. That analogy actually can just be applied to investing. If you think about investing, there's so many things we don't understand in investing. There's so many types of investments out there. They can be very complicated. They can be intimidating, especially if you are new to it. But if you stick with it and you learn over time, you would get to understand that, it's just like another thing, just like something you didn't know in the past, but then you spent time with it and you got to understand it. And it's the same approach you want to take when it comes to investing. But here's the catch though. You have to be very careful, because when you put your money into something you do not understand, there's a high probability that you can lose money. And that's not what we want. And this is where you need to start small and slowly build your understanding, which means whatever you invest, make sure it's something that you know that you can temporarily take a loss on, just in case it goes the other way. But the best thing is, before you even get started, make sure you understand the business, make sure you understand the stocks, make sure you understand what you're putting your hard-earned money into. Because if you don't, there's a high probability you're going to lose money. If you think about those pyramid schemes that people put their money into, the reason why they lose money is because, it's a pyramid scheme and after some time it will fail. And if you don't understand that from the onset, you think it's an easy way to make money, but it's not. It's just a way for you to lose money quickly. So when it comes to investing in the stock market, one of the things you want to do is to have an understanding of what you're putting your money in. So if it's a business, if it's, a stock of let's say Apple, Microsoft, you probably want to understand what they do and how they generate money and how they make money. And hopefully you can project, in the next 5-10 years, where would this business be in the next 15 years? Where do you think is likely going to be? If it's in line with your time horizon, right? Thinking, okay, this business can sustain itself and you see it making money in the next 5-10 years, then maybe that's something you want to put your money in now. Generally speaking, the stock market over time grows. Think about the GDP of a company, of a country. Countries are always getting larger, generally speaking. So if the businesses in that country continues to grow and continue to make money, the stock market will continue to perform well. It's as simple as that. Of course, it would go up sometimes, go down sometimes. There'll be recessions and things that would disturb the trajectory of that stock, but over time, they will perform well. But the first thing is you need to understand the business. Not that you have to understand it to a point where you're like trying to become a CFO or CEO of the company or CEO of the company. No, that's not the point. But the point is, just from a human level, they call it like a 12th grader should be able to understand the business. And if you can, there's most likely a chance for you to make money. The next thing is the fear of losing money is one of the reasons why people don't want to invest. If you fear losing money, there's a probability that you want to put your money in the stock market. And this is where you need to do your own part to understand that in order for you to earn money, you need to be willing to take some risks. If there isn't any risk taken, there isn't any reward. The more the risk you take, there's the higher the probability of you making money. Of course, there's the higher the probability of you losing money as well. So your part is do your due diligence, have an understanding of the business. Now, be willing to take that risk. Be willing to understand that, yes, you could lose money, but if over time that business continues to operate well, you will make money. It's as simple as that. If the business continues to make money, you will make money. If the business is continued to be run or it's been managed properly, then you will make money. It's as simple as that. Now, the third reason why people don't invest is just lack of money to invest. And this is where we always talk about things like budgeting and cutting down your expenses, not buying things that you don't need. All these things are ways in which you can help your future, because if you cut back on things you don't need, the extra money that you've saved or that you're able to put aside, you can use that money towards investment. And hopefully over time, your investments will grow and they will start to give you back some money in return, because they've grown to a stage where maybe they're paying you dividends, or you can sell some of your profitable trades and use that money for other things. But it all starts with you having some money to invest in the market. If you don't do that, then you will have some problems. So I just wanted to share these 3 things with you. If you are interested in more subjects like this, check out this next video. I'm sure you will benefit from it. Don't forget to drop a like on this one as well. I'll see you in the next one.